So there was just an explosive new report about Florida's property insurance market. Insurance company investors were secretly making billions of dollars in profits while their insurance companies claimed to be losing money and using those losses as a reason to get Florida lawmakers to make a series of increasingly anti-consumer changes. What's more, a report about this was kept hidden from the public, including from lawmakers, for 2 years. We're going to talk to the guy who broke this story in just a sec. Hello, and welcome to Seeking Rents, the podcast. I'm your host, Jason Garcia. I'm the publisher of Seeking Rents. That's a newsletter in Florida about state politics, but with a particular emphasis on the ways that big businesses and other special interests influence public policy in this state. That name, Seeking Rents, comes from a term in economics called rent seeking. And rent seeking is what's happening when someone with lots of wealth and influence, like a big business or a billionaire, uses that wealth and influence to get laws changed in their favor in a way that allows them to capture even more wealth and influence for themselves, usually at the expense of someone else. So it's been a while since we've had a guest on the show, but we're going to do that today with, and my guest is Lawrence Mower, a reporter in the Tallahassee Bureau for the Tampa Bay Times. Lawrence is one of the very best reporters in Florida today, particularly when it comes to the intersection of business and politics. He's done just a ton of phenomenal work. But I wanted to have him on specifically because of a story he broke just last week, I believe, or over the weekend. An explosive story finding out that state insurance regulators had secretly commissioned a report that found that insurance company owners and investors were making billions of dollars in profits, even as their insurance companies claimed to be losing money and using those losses to lobby Florida lawmakers to make a series of increasingly anti-consumer changes. What's more, this report was kept hidden from the public, including from lawmakers themselves, for nearly 2 years. Like I said, this was just a bombshell of a story, and one that I think is going to have significant repercussions in Tallahassee, where Florida lawmakers are about to go into session, and I think there's an increasing chance they're going to do something about this. So anyway, without getting too much into the way, we'll get to Lawrence in just a sec. But just a reminder, make sure to click the like and subscribe buttons. And as you listen to this, if you've got any thoughts or comments or questions, please make sure to leave them in the comments below. Okay, with that out of the way, let's get straight to Lawrence. Lawrence Mower, welcome to the show.
Thanks for having me.
Yeah. Thank you for doing this. So you had an absolute bombshell of a story, as far as I'm concerned, and so about the one issue that everybody still cares about in Florida, property insurance. And so, I guess just for, I'm sure a lot of folks have read it that watch this, but for folks that haven't, can you just sort of take people through that story, what you found, what it was about, just tell people about the story.
Yeah, I mean, this really goes back to kind of the beginnings of the insurance crisis, back starting in 2017, when lawmakers were basically wondering about what to do, how to respond to premiums going up and companies going out of business. They were, there were a variety of ideas that were discussed. Of course, the primary idea that they did was cracking down on insurance companies.
Right.
But a number of lawmakers were talking about, what about these MGAs? And when I was reporting on it back then, I'm like, what the heck's an MGA? I didn't know. These are basically affiliate companies of insurance companies. And amid all this chatter, the Office of Insurance Regulation basically got a little provision in a bill passed in 2021 that allowed them to basically get more information on these affiliate companies with and their relationships with insurers.
Right. And Lawrence, can I just pause there just for folks
Sure.
that don't know this as well? So what you're describing, and correct me if I'm wrong, but basically insurance companies, the actual property insurer, these are regulated businesses where there are laws around the amount of profit you can make. But a lot of them, all of them, I don't know. A lot of them have set up affiliate companies, like you mentioned, MGAs, as that's managing general agent. Is that right?
Managing general agents,
And
yes.
some of them have different other affiliates, and they pay themselves. They pay these affiliates for services like claims processing, like they borrow money from affiliates and pay interest on these loans to these affiliates. And these affiliates are unregulated in terms of there's no cap on the profits they can make. Am I kind of describing the issue we're talking about, right?
Yes,
Okay.
that's pretty much the dynamic.
Right.
And the problem with this setup, well, there's a benefit to this setup, which I'll get to.
Okay.
But the problem with this setup is that if you're a company, say you offer, whatever your business is, you might farm out to a third party for legal services. Say all kinds of companies will have lawyers on retainer or something, but usually if you have a relationship with another company like that, you're going to be demanding the best possible price
Right.
for that service. But what's going on here and what has been going on in Florida for a long time is that if you're making a deal with your sister company and the same person is in charge of the insurance company
Right.
and the sister company, well, obviously there's a potential for abuse there. You
Right.
could
Especially
overcharge the insurance company for the services.
right.
And of
Especially
course,
when I'm sorry, just to say, especially to emphasize the one company, the left pocket, again, by law is limited how much profit it can make. The right pocket there is no limit, right? So the incentive
exactly,
you have to overcharge on the right pocket is pretty high.
exactly, exactly. And that's what's been going on here for a long time. And back in 2021 and 2022, state regulators actually decided to look into this. They
Hmm.
wanted to actually do a study to understand the scope of this issue. Is it an issue? How big is it? And they commissioned this, they paid like 150,000 to a consultant that they often hire to to analyze this data they collected from insurance companies. And basically, the consultant came back and said that, well, between 2017 and 2019, this period that they looked at, insurance companies were losing hundreds of millions of dollars. They had a net loss of hundreds of millions of dollars. Meanwhile, the affiliate companies had a net income of billions of dollars. And granted, all of the money here we're talking about comes from the premiums that you pay
Right.
on your homeowner's insurance. Okay.
Right.
That's all the dollars. Okay. So why in the world would the insurance company be losing so much money? I mean, and the affiliates making way more
Right.
than that. And that's after the insurance companies were losing money, even after spending $680 million on dividends during this period.
Right.
And so that is what basically regulators found.
Right.
That's what this report showed. And regulators had some issues with the report, which we can talk about later. But basically, my story was about how this report was released or was created or published in 2022 and never released to
Right.
lawmakers I mean, it took me 2 years to get it.
That's why I want to put a pin in that because I want to come back to that point too. But just on the timing on this. So this is late 2022, right? So if folks remember,
No,
this
early
was
2022.
early 2022. Okay. So 2022 was sort of the height of the insurance lobby crying poor in Florida and saying we need reforms. And 2022 was the year we had two special sessions, the kind of the pre-election special session where they did a little bit of what the insurance industry wanted, and then the December 2022 special session where they did essentially it's bit of an exaggeration to say everything the insurance industry wanted, but pretty darn close to everything they'd been looking for the last few years. They'd been lobbying for in terms of taking away litigation rights for folks, like in terms of driving up prices at Citizens to force more people into higher price private insurance, that sort of stuff. And so, as the insurance company is both, as the insurance industry is claiming to be losing lots of money and advocating for these pretty harsh reforms if you look at it from the lens of the consumer. This report existed finding that there was in a sort of I would think to anybody outside the system an unknown far more than we expect than we realize amount of essentially profit stripping is what I would call it, although feel free to push back if that's too loaded a term happening. And
Well,
but
yeah.
go ahead.
Mhm.
But this report was never provided to lawmakers before any either of these special sessions. Is that right?
No, no. And lawmakers were talking about this very
Right.
issue during this. I mean, they were wondering about the relationships between affiliates and what was to blame there. Because frankly, the companies that have gone insolvent in Florida, probably the most common thread with all of them is that they had these improper relationships. These
Right.
relationships were being abused. Literally, you mentioned profit stripping. That was one of the phrases that an auditor hired by the state found when they went into one insolvent company. They said, Literally, the executives were, quote, stripping the company of cash as it was going out of business. I mean, this was a known thing.
Right.
And during
Right.
these sessions, basically, there was virtually no data on the insurance crisis. I mean, the state didn't even know what the average homeowner's premium was in
Right.
Florida. I mean, that's the level of ignorance the
Right.
lawmakers were going into. And, and this is something that regulators had at the time,
Yeah.
this
They had.
report.
And what was the answer you got for why wasn't this provided to lawmakers at least? And we'll come back to the why it took 2 years to get it into public records, but why wasn't it given to lawmakers? Especially like you said, there were lawmakers that sort of were aware of this practice and were like asking questions about it. So there was obviously interest in it. What was the rationale for not turning it over?
What they told me is that this report is like an incomplete picture saying we don't ultimately know where all the capital went, is
Right.
what they're saying. There were some other issues with the report in that it it didn't look like it's incomplete basically.
Hmm.
Like a lot of companies didn't participate in it for whatever reason, and that's not clear to me why, what exactly OAR did about it. But I heard about this because the industry was fighting this request for data back in 2021 and 2022. That's why I knew that there was
Ah,
something going on here, that there was going to be some kind of report at some point. But they said it's incomplete and it's not a total picture of, where the capital is going and whatnot. And, I still thought that, the findings here, I mean, they do show where some of the capital went. They do show
right.
that, that hundreds of millions of dollars, basically what the dynamic that's been going on is that, these the most of the money seems to be going to the affiliate companies. And when the insurance company gets in trouble because it doesn't have enough money,
Right.
the affiliates will funnel back into the insurance company hundreds of millions of dollars or waive hundreds of millions of dollars in fees.
Right.
But even after doing that, the affiliates were still profitable by at least $1.8 billion dollars.
That's wild.
So, and the insurance companies were losing hundreds of
Right.
millions of dollars. And so it just things didn't quite add up. And is this an incomplete picture? Yeah. I mean, there's a lot more to this report that we never got because it's a lot of it's trade secret.
Right.
But yeah, but this was, I think regulators are right. This probably is an incomplete picture. And the other thing regulators told me is that, we don't give every single report we do or examination to lawmakers, which is true. And
Sure. Right.
I mean, and frankly, a lot of what OIR does is not a public record.
Right.
But on the other hand, they'd never done a study like this
Right.
before. I
Yeah,
mean,
that
this
is
was illuminating in a lot of ways.
right. That is quite the straw man they're constructing with that argument. I'm curious to bounce something off you because I have a little bit of trouble accepting the explanation that this was incomplete and so we didn't want to provide it when the one stat that the insurance commissioner's office used all the time, in addition to the governor and legislators that were supporting these reforms, was I forget the exact number, but essentially that Florida had far more insurance lawsuits than it did as a share of claims than any other state. And they threw that data around that stat around all the time without ever making any attempt to get at why that was the case. They were acting as if just the virtue of a lawsuit meant that the laws around lawsuits were what was broken rather than perhaps bad behavior is driving these lawsuits. So this idea that they were worried about giving lawmakers incomplete information when they were more than happy to use incomplete stats in other ways is tough for me to swallow, but I'm sort of curious to hear your kind of pushback to that.
Well, yeah, I mean, my frustration in covering this entire issue has been the lack of data, the lack of
Right.
information. I mean, early on, I was asking, like, these companies go insolvent. Why isn't anyone trying to learn any lessons from these insolvent companies? This was years ago. And there was actually a statute on the books where they were required to do that, and nobody was looking at it.
Right.
And so I've long had this frustration over the lack of data. And yeah, with that particular statistic, I mean, it's at best an incomplete snapshot. I mean,
Right.
Florida is a highly unusual insurance market. It's an outlier for a number of reasons. And the other thing is that, yeah, Florida did have a lot of lawsuits. No one I've spoken to thinks that none of these lawsuits were frivolous or
Right.
abusive. Okay.
Right.
On the other hand, nobody I've spoken to thinks that insurance companies have been perfect and treated everyone
Right.
right. And so the real the real picture is somewhere in between. And the question
Right.
is, what percentage of
Right.
lawsuits were frivolous? What percentage of claims are real? Who are the biggest abusers? Why aren't people being locked up? If there's real fraud going on, like why aren't people being arrested?
Right.
And it's just yeah, this whole issue has had a lack of data around it, as I've kind of noted in past stories.
Yeah. And I want to ask you about, and you touched on this in this story, but this was another story, another fantastic story you had that I've cribbed from many a time since. But in, I think it was the 2023 session, the commissioner's office, which by then under a new commissioner, was asking for some more regulatory powers around trying to, my understanding was trying to get at more information around these internal transact or these intercompany transactions. And the legislature, and started off with a bill, and then by the time they got to the finish line, is like, whoops, where did that go? Tell me about what happened there and what the commissioner's office was looking for at that point. What happened to sort of what they were looking for.
Yeah, I mean, the sense I have on this entire issue is that even David Altmaier, the previous insurance commissioner who was in charge in 2022, I mean, he commissioned this report
Right.
to his credit. I mean, he wanted to know more information about this. He did seek the ability to get more information on this stuff. And so when
I
Mike,
assume, I'm sorry to interrupt, but I assume he was also the guy that made the decision not to show it to legislators. Is that fair?
I don't know if a decision was ever made, frankly.
Okay.
I'm
Yeah.
not sure who saw this, where it went. I mean, it went to the top people at
That's
OIR,
true.
but
I guess we
I
don't
don't
know
have any.
he's right. Yeah.
Yeah, I don't have anything like, I've got other records in addition to this report, relating to this report, and I don't have anything showing that Altmaier was shown this report or anything like that. So I'm not sure what he saw or
That makes sense.
whether even decisions were even made. But yes, the current insurance commissioner takes over in 2023, Mike Jaworski, and yeah, he does. With these reforms, they did, of course, more insurance reforms in 2023, again, making it harder to sue insurance companies. And Jaworski, kind of in his back pocket, says, "Well, while we're at it, let's push this insurer accountability bill, which puts some limits on and requirements on insurance companies, responding to claims on time, and increase the penalties big time for companies that abuse this." And like you said, he also pushed for basically more insight into these affiliates, including he wanted to know like the actual cost.
Right.
He wanted insurance companies to report to OIR the actual cost of each service provided by an affiliate. And
Which
the
seems
rest,
like, which seems, by the way,
yeah,
just like a basic piece of information for a regulated industry, right? Like, I mean, you're not asking for something wild here. You just want to know how much you're actually paying for things.
exactly.
Yeah.
And they also want to know like the financial condition of the insurer and its managing company. Now they know the financial condition of the company, the insurer, but the other affiliates they don't really
Right.
have a great picture of, and the amount of dividends paid by the parent company. Again, we're all
Right.
going back to these are the premium dollars. What happens to the premium dollars? Once you're a homeowner, pays the check each year or however they do it. And so what happened was this was in the insurer accountability bill. And of course, when I saw that, I was kind of like, "Whoa, this has got some real teeth." And as it went through the committee process, those particular provisions were taken out. And I mean, obviously, regulators wanted this. They're the ones who asked for it, and this
Right.
was actually their bill.
Right.
They're the ones who had the language. And so what lawmakers told me at the time was that, oh well, if we get this stuff, we could upset the apple cart. That's literally the phrase that Senator Travis Hudson told me at the
Right.
time. This would upset the apple cart of the industry because again, this is how insurance companies make money in Florida. This is how they're not making money off the 4.5% limit
Right.
that the state imposes on the insurance company. They're making money off the affiliates.
Right.
And that basically went away. And what OIR is asking for basically the exact same things this year. They've got a bill floating around that they're asking for this insight again. They want this.
Right. And so before I go further, you had alluded to that there's a case. What is the insurance case for this setup? That there's, obviously we've been pretty critical or talking on the side of like the dangers in this. And just by the way, this is exactly what happens with corporate income taxes as well, where you set up, you use internal transactions, transfer pricing, they call them, to essentially move profit out of the business paying taxes so it looks less profitable, even money losing in many cases. And you stick it all into affiliates that don't have any nexus to Florida, so they don't pay any tax to Florida. It's the exact same game. But what would the insurance industry tell us about like why this structure works?
Yeah, well, basically because it is a way for the investors to make more money. I mean, Florida's insurance market, look, I'm sorry, but you're not going to lure many, investors to Florida making a 4.5% profit in arguably the riskiest
Right.
place in the nation, certainly in the nation, but maybe in the world for homeowners insurance. It's not
Right.
going to happen. Okay. And so the way you make money is through these other agreements. You create a number of companies, and the number of companies, all these other affiliate companies make a profit on the services they're providing. you know and frankly, I think they're allowed to make a slight profit off these services, but not kind of what they've been seeing here. I mean, in this author's estimation, at least half of the companies in Florida had relationships with affiliates, financial relationships that were, quote, not fair and reasonable. Of
Wow.
course, that's a vague standard
Right, right,
in state law. It's undefined in state law, but that's the kind of the rub there. But
right,
this has been a successful model in some ways in Florida. I mean, there are some companies that have been successful making money this way, and it is a way to lure more capital here, which of
right.
course I it's a question of how healthy these companies are. Obviously, the National Association of Insurance Commissioners say that these relationships can obviously need much greater regulatory oversight because they can be abused.
Right.
But it's really a balancing act.
Right. Do we have any sense of, is there any interest in taking on that particular issue legislatively this year? Is the office finding any legislative sponsors? Is there, I know Don Gates and I forget who is the House sponsor, but they have a bill that sort of
Andrade.
gets at this. Oh, Andrade, yeah. What's the sense of what's the mood in the legislature? Can you tell for actually trying to get at some of this kind of accounting stuff?
The mood is, well, first of all, I'm not sure what's going to happen this year. I would not be shocked if nothing happens this year.
Right.
But the mood is that, okay, we gave insurance companies everything they wanted. Yeah, the market is stabilized, but rates are not going down. And so the hammer is, or the pendulum might be swinging more towards the insurance companies, like doing more on this. I mean, you mentioned Don Gates's bill, and that like requires more reporting over CEO compensation and stuff. And of course, the CEOs in Florida for these insurance companies, a number of them have been making tens of millions of dollars a year. They certainly
Right.
were for a while. I
Right.
mean, they were not, the only way the CEOs are making that kind of money is through the affiliate system,
Yeah.
because those kind of salaries are approved by OIR,
Right.
if it's coming from the insurance company. But in this case, it's not. It's coming from the affiliates. So there definitely is an effort, especially by Republicans. Republicans seem to be more chomping at the bit to do something on this than they have been in the past.
Yeah. And what do you think that is? Is it just sort of hearing it from constituents, or is it? I mean, they're probably getting their own insurance premium bills too. Like, what do you think is motivating sort of the pendulum swing?
Oh, it's definitely what they're hearing from constituents. This is
Yeah.
still far and away the number one issue that they're hearing about day in, day out. I talked to Don Gates last week, and he was like, this is the reason why I ran back for the Senate. I mean, he hasn't been in the Senate since I think
Right.
2016. And he's like, look, this is everywhere I went, literally everywhere I went, people were talking about this particular issue.
Right.
And he's a self-admitted, he's like, I'm a tort reform guy. I would have voted for all that legislation, but clearly it wasn't a silver bullet,
Right. Yeah. That.
and also with OIR wanting more oversight, that does give the lawmakers a little bit more impetus to do something.
Right. That makes sense. I wonder, it strikes me as listening to all of this that we have this, I don't know if this is too strong, but sort of pinball off it if you can or want to, but that we kind of have the worst of both worlds where we have this, we claim to have a regulated system, but it's not so much of it is unregulated that we have no insights to. So there's like the illusion of regulation happening, and then but a lot of unregulated activity is happening just off stage with these allegedly regulated companies. And so you end up with this situation where you don't get the benefits of a regulated system would be like cost containment and sort of thing like that, but you do get some of the downsides where you're driving all oh, this lack of transparency or whatever opaqueness in the market is. I don't know. How do you sort of think about that dynamic?
Well, yeah, I mean, I think that's exactly what OIR is saying.
Right.
OIR is saying we want more insight into these companies. They're basically, if you look at these companies, these insurance companies, and I know you've seen these, but they're a spider web of entities,
Right.
and they only have a periscope looking at one
Right.
one of those companies, okay? And they want to see the entire picture because that's really what matters is the
Right.
entire picture. Like
Right.
how overall are these companies doing? They're not opposed to people making a profit. They want people to make a profit here.
Right.
That's good for business. And frankly, it's good for homeowners if these companies are treating homeowners properly.
Right.
But you're absolutely right, is that the regulation is only on one aspect of this. It's not the entire picture.
Right, right. That makes sense. Okay, so now I want to switch to, you alluded to this at the beginning, that it took you 2 years to get this report through a public records request. I want, just tell me about that experience. How were you able to finally pull it out? What were the answers, if any, you got for how on earth did it take this long to get the report? Just walk us through that sort of experience.
I've never gotten an answer about why it took 2 years. I will say, like, one thing that's unusual about this case is that OAR has been really good about getting the records requests.
Right.
They've been under Jaworski, they've been, pretty responsive, frankly. And so this case really stood out. And, as a reporter, it kind of stands out because, anytime you're fighting on one particular thing, it raises your spidey sense. But
Right.
initially, I was told when I requested this report, I was told it was still open.
Mhm.
Now, I know now that it wasn't. The report had been finalized for 6 months by that point, or it had been left basically in a draft form and never done with nothing had been done more on it. And so I kept following up, and OER spokesperson was like, "Yep, I'm working on it." And they were, I mean, at every step of this, I felt sincerely that they were working on this.
Mhm.
And basically, the spokesperson told me that they had it. The spokesperson at the time told me that they had it, and they were going through redactions and stuff. And the entire report, what I requested is big. It's hundreds and hundreds of pages, detailed financial transactions apparently on all these companies, on 53 insurance companies. It's basically the author's work product essentially,
Mhm.
backing everything up. And by last year, we basically had our lawyers get involved, and we had to they kind of denied that the report existed at that point, or somebody at the agency had denied that it existed. And eventually it got up to the commissioner level, and we worked out some kind of, we paid them for redactions, and there was nothing redacted. We basically only got the executive summary, I think 12-page executive summary. We've still never seen the rest of it. They wanted $1,500 for records or for redaction costs for that to basically remove the names of all the companies and any other identifying details. So we basically just got this summary, and I still don't know why it took 2 years. I'm not sure people there can tell me why it took 2 years.
Right.
They did have a changeover, of course, between Altmaier and Jaworski. They've had a changeover in spokespeople, and I'm not sure. I've never gotten a good answer on it, and so yeah, my editors and I felt like that was something to note in the story that it took 2 years.
Yeah, absolutely. Was there any indication in the records, like was the industry fighting the release of it in any way? I mean, I know they can invoke trade secrets in different avenues, but like, was there any indication that there was anybody fighting the release or trying to stop the release or anything like that?
No, when I mentioned insurance companies fighting back on it, they were resisting the OIR being able to ask for this information in the
Yeah,
first
like
place.
going into the report, or like producing the report in the first place.
Exactly.
Yeah, right.
Or asking for the data.
Yeah.
My original question to OIR was like, well, I assume you did something with this data. You analyzed it. That's what I want.
Right.
And I don't think, the industry was even aware that this report existed until I started I got my hands on it and started sharing it with people and sources and stuff and saying, you know, what do you make of this?
Right.
We got it back in December, and a number of people saw it afterward because I wanted their input
Right.
and thoughts on it, including in the industry, insurance companies. I sent it to lobbyists and stuff and said, I want to hear your best argument for why this is bogus.
Right. Right.
And never really got a good argument in that sense.
No, that's interesting. The other thing I wanted to ask you about this, another issue that you alluded to, and I know I've run into it, and other reporters have, and I know this actually comes up when you talk to like legislators and policymakers too, is the trouble with getting data and information out of specific insurance companies because of the fact that there's sort of aggressive and broad use of public records exemptions for trade secrets, and they classify everything as trade secrets. And I'll tell, like, the last time I took a look at this, I was just looking at one insurance company's slide that in like a financial examination sort of went through in pretty detail just how much money they were paying to transactions. I don't have the numbers in front of me, but it was something like the insurance company claimed to lose like $2 million for the year, but in that same year paid like $200 million to affiliates. And at one point, I wanted to see one of their agreements was an MGA agreement. So we talked about managing general agent, and I was curious, like, oh, okay, well, how's that fee structure compare to others? Because I know there's others out there. I think I've read in your stories where you've talked about some of the fee structures in those. And Slot had already labeled its MGA agreement as a trade secret and gone to court to stop. And it wasn't actually in response to my request. It was, I think, some trial lawyer had come looking for it at some point or something like that. And so I couldn't even compare. Now, I nor anybody could compare whatever Slide was paying to its MGA to what other insurance companies to see if it was the same, if it was out of whack, whatever. And that was just one small example of where you clang into this. And tell me about sort of what you've seen with trade secrets, whether or not you've seen it sort of wielded more in recent years, or if it's always been like a huge problem. Just tell me what you've run into.
Well, this really goes back to after the previous insurance crisis, after the '03, '04, '05 storms. Basically, the State Farm kind of kicked this off. State Farm started
Right.
claiming that the number of policies they had in the state was a trade secret. You couldn't even
Wow.
know how many policies companies had. And a lot of them, jumped on board with that, wouldn't release that. They claimed
Right.
trade secret as well. That's, a number of them did not, though, which is interesting.
Right.
But that it has gotten a little bit better. Actually, I think it was in the insurer accountability bill that OIR stripped out that trade secret exemption for policies. You can't claim the number of policies you have in the state as a trade secret anymore. And so the state actually puts all that online
Mhm.
now. They publish those results every quarter. Here's the number of companies. Here's the type of policies they have for property insurance. But we still don't get county by county
Yeah, I was gonna
numbers.
say, right, right.
We don't get county by county numbers. That we used to get that stuff way back in the early 2000s and stuff. And we don't get that anymore. There's other things I've tried to get through, the system that OIR uses for rate filing, as I'm sure you know, is a complete and utter mess. Um,
Right.
I mean, seriously, I don't know. I've never met a single person or let me put it this way. I've never asked a person, do you know how to use a system? And they've said yes. Okay.
Right.
I mean, it's really archaic. And that is one thing that OIR is asking for. They want to modernize all of this. They want to have a lot more data out to the public. They want to include like, much more information about why your premiums are going up. Like they want to require insurers to disclose on your annual renewals, like here's the breakdown of where your money's going, basically.
Mhm.
And the industry isn't happy about that, but that's one of the proposals they want to do. And so there is a big push for more data. And OER now does collect, I mean, they'll say this all the time. They do collect more data now on this stuff than any other state, which I believe them,
Right.
on that. But, it's not just Florida where this is a nightmare. If you go to like the National Association of Insurance Commissioners, I've never had that organization ever participate with me in any story ever.
Wow.
I mean, and that's an organization that arguably should be a resource for the public, but
Right.
they view it as they're only a resource for the industry.
Right.
And so they have a trove of data about this stuff. And I know it's a frustration of the office and some of the people there. And it's certainly been a frustration of mine because this is an industry that is based on data,
Right.
actuarial analyses, storm projections. I mean, this is all data. When I reported this year, I think last year, about insurance companies closing claims and why they, basically saying, there's a high rate of closing claims with insurance companies here without, basically closing claims without making a payment. The
Right.
industry was like, oh, well, there's all kinds of reasons why this is the case. And I'm like, okay, well, show me the data.
Right.
Where is the data? Like citizens at the very least should have been able to produce that data
Right.
quickly. And they couldn't. It took them days and days and days. I think it might have been weeks for them to produce that data. And it refuted some of the talking points that officials
Right.
had said that these are duplicate claims. Well, no, they're not duplicate claims. There's a variety of reasons why these claims are closed, but until you produce data on it, it's been a general frustration, I think, for
Right.
everyone involved, and like you mentioned that litigation figure, that's a classic example. It's like, well, yeah, that's a really alarming statistic,
Right.
but I don't understand why the state couldn't have commissioned Florida State University, which has an insurance center here, to, hey, pull 1,000 lawsuits at random and
Right.
go through and find out how many of these are frivolous and how
Right.
many of these are real. How hard is that? The state has still never done a study analyzing the root causes of this insurance crisis. They
Right.
haven't done like the kind of deep, deep dive that, you would kind of expect from an issue this large.
Right. Right.
The legislators, I mean, that's not necessarily on regulators, that's on legislators. They
Right.
never really asked for more,
Right.
you know.
Well, boy, that is not an uplifting place to end it there, but actually, I do have one other question for you, and I don't know if this gets too far afield, but I've been thinking about in the context of these internal transactions. We've been seeing, and I'm going to probably muck up some of the terminology here, but we've been seeing sort of newer models where attorney in fact models where I think it's like reciprocal insurers where essentially the insurance company itself is like essentially it's just the policyholders own it. It's like I don't know if it's technically a nonprofit, but it's basically like a co-op, but they sign an agreement with an attorney in fact to basically run the entire operation, and that attorney in fact is what's owned by the investors in the insurance company. So you end up with this, it seems to me you get to the exact same place as you do with all these internal these affiliate agreements and stuff, except in this case it's like one giant master agreement. But do you know much about sort of how that model is evolving, and how does that affect like what we're trying to figure out with these transactions, and is that the legislation that OIR is talking about this year, does that sort of encompass the fact that they're, it's not all just sort of MGAs and claims handling subsidiaries, but now there's this reciprocal model?
That's a really good question. And the short answer is I don't know enough about it yet. I've not
Right.
quite gotten to the reciprocal stuff, but a number of the companies that are starting up here are reciprocals,
Right.
and people have, kind of casually told me that, that, this is a healthier setup to other companies, but frankly, I haven't done the reporting to know
Yeah.
either way, like what exactly the makeup is here. And I believe there's some legislation. I believe I saw some legislation this week dealing with reciprocals. Maybe it's OIR's bill. I'm I'm frankly not sure, but it's a
Yeah.
it's a big question.
Yeah, yeah, and I know about as much as you do, so I may have even mucked up, some of the description, but like I've had people describe it to me too, and I can't sort of like there's not an obvious reason to me why it would be superior in any way to, or more stable than the current setup. It just seems different, but anyway, another thing to keep an eye on in case they decide maybe this is the year to kick over a few apple carts. So,
Yeah, I mean, it could be. It could be.
yeah.
I'm not necessarily going to hold my breath, but I do know that there is an appetite from Republicans to do, you know, more, taking a stronger look at insurance companies and what they're doing. There is an appetite for that, which it feels very different than past years.
Yeah. Yeah, that makes sense. Well, and I've learned today that we might get a chance at getting an actual useful OIR website. So that alone would be, I would be super grateful if somehow that passed this year. So,
Yeah, yeah, it's me too.
right.
Yeah.
Lawrence Mower, thank you for doing this. Thanks for all the work you're doing, and to anybody listening to this is why you subscribe to local newspapers. This report probably doesn't ever come to light without the work that you're doing at the Tampa Bay Times. So thanks for that, and thanks for being here.
Hey, thanks, and happy to be on anytime.
All right, man. Take care.
Cool. You too.
Okay, I'm gonna stop it. All right, thank you once again to Lawrence Mower for joining the show. I hope you found that conversation interesting, maybe a little bit infuriating. If you did, good time to reach out to your legislators and make sure they do something about it. Again, the legislature is about to start, so like the time to let them know about stuff like this is right now. Before we go, just a reminder, if you've watched this far, make sure to click the like and subscribe buttons. That helps us get this content out to more folks. And as always, leave any comments you have below. Okay, well, thanks for watching, and we'll see you again soon.